Alright guys, there have been a lot of requests to make a special video on how we select the mutual fund. Now guys, if you're following our channel for a while, you probably know that in this channel we try to focus on the process. We do not try to focus on the return. And you probably know that we show our investment, what exactly we are investing every single month and what is our thought process. We try to share that as transparently as possible. We share both our stock portfolio that you see in the screen here, and also we share our mutual fund portfolio. This is going to be a small update on the mutual fund, especially one of the mutual fund that we have invested. So we are going to talk about a mutual fund scheme that we have invested. The name of the scheme is Nippon India Small Cap Fund. The first time we started investing in this mutual fund, it was October 2018, and since then we kept on investing without missing a single SIP. And that you see, we have invested in a very small amount, and we continue with this investment every single month with a little bit increase in annually. Now, why we have invested in the scheme? Let us try to understand that one by one. I will walk you through the thought process why we have picked this fund specifically at particular that time, and why we prefer to invest right now as well. Without having any further delay, let us start. As you can see in the screen, we have 12% allocation in Nippon India Small Cap Fund. Another mutual fund scheme that you see, that is SBI Small Cap Fund. Currently, the amount of SIP that we put in Nippon India Small Cap Fund is little bit more than SBI Small Cap Fund. So today we will talk about Nippon India Small Cap Fund. Now first, I will take you to the fact sheet of this fund. Now before we go to the fact sheet analysis, so what we have seen, the most of the people that do in YouTube, they come on the YouTube and then they compare the return of mutual fund, and they compare what is the alpha, what is the beta, and what is the expense ratio. Based on that, they give their verdict which mutual fund is performing good in last 3 years. Based on that, they make recommendation, and you keep seeing that kind of video over and over. Every single year, the top recommendation keeps changing. We have already made a video why the prediction doesn't work. You can check the video by clicking the I button over here. Now, we will not discuss about the return, because return is the outcome. What is more important is the process. We prefer to focus on the process, not the return. So for picking this mutual fund, also we have applied little bit of thought process to understand the process. And if we understand the process and if we like the process, we will prefer to invest in that mutual fund. So the first thing, the alpha, beta that you get to see from the fact sheet, we are not going to talk about that in details. We are going to talk about more on the investment style that this fund is particularly following. So if you see right now, this mutual fund scheme is right now managed by Samir Raj. Before we check that, let us first come to the history of this fund. What you see here, you can get this information from Morningstar free of cost. When you click in overview and scroll a little bit down here, you will get to see the fund manager who has managed this particular fund. If you see, from 2010 to 2017, this fund has been managed by Sunil Singhania. So if you see the past performance of Sunil Singhania, he has been a stellar stock picker, especially in mid cap and small cap category. All of you probably have heard about Sunil Singhania and his success story, picking a lot of winning stock in a very early stage. So at this point, if we are considering the fund performance, we will see who is the fund manager right now. If the fund manager has changed, we will obviously not be extrapolating the past performance and trying to predict what is going to be the future. So at this time, Samir Raj is managing this fund, and this fund since 2017, he has been the key person managing this fund. Now we will see what is his investment style and overall what is the investment strategy this fund follows. We will understand it by checking some of the key metrics which will not be talked about a lot of YouTubers or the brokers report. So let us talk about all those things one by one. So if you come here, the most important thing that I check in mutual fund is the annual turnover. If annual turnover rate for a particular mutual fund is less than 30, I find it to be very comfortable investing. If you see, the turnover of this particular fund is 40%, which is above 30%. At that part, it is not fitting well. But when we invested in this fund, we have seen that historically, this fund keeps the annual turnover below 30. Sometimes what happens, the market goes upside down, or sometimes it goes for a high rally. At that time, it may need for this fund to to churn their portfolio a little bit. So some of the time, if you're just checking for one particular month, you may see a very high turnover ratio, but with time, historically, and then if you take an average, then you will get a better picture of the annual turnover. That information you will obviously not get from by looking just for one fact sheet of a particular mutual fund. You have to keep it tracking over years. So right now it looks a little bit elevated. When we invested, it was in the range of 20 to 30, which was comfortable for us. So if the turnover is more than 30 consistently, if it remains more than 30, what does it mean? The fund manager is investing in a stock and then selling it very fast. That means 1/3 of the portfolio will be churned every single year. There is very low confidence on the stock picking the mutual fund manager is showing. This is the message you should get by looking at this annual turnover ratio. Another most important thing that the reviewer of the mutual fund, they never discuss with you is their portfolio managing style. We will show you what we like most in this particular fund. We stay invested because we like this investment approach. First, if we just go to their fact sheet, we will be able to see they are having a lot number of stock in their portfolio, 139 stock. Typically having a really huge number of stock doesn't make much sense in a large cap or mid cap category, but for small cap category many times it makes sense. I'm going to explain why it makes sense for a small or mid cap fund more than 50 or 100 stocks in a portfolio. First, we will find out what is the average. Even though it is a small cap fund, we will find out what is the allocation right now in terms of the market cap. If you see in the medium cap, this fund is having allocation around 50%. You see this ratio over here. If you see the allocation of this mutual fund in the small cap category, it is 24.5%, and in the micro cap category it is having 12.26%. so you see, even though this fund is named as small cap fund, it is investing in equally in medium cap and the small cap and some of the portion in the micro cap category. Now when you are having an exposure on the small cap and the micro cap category, what happens when you invest in a particular stock and if it runs up a lot, what happens after a certain time, the incremental money that comes into the mutual fund, it will not be rational to invest in that particular stock if it has run up a lot, simply because of the valuation. So you can understand, if you are investing in a stock at rupees of 100 rupees and after 3 years, if this stock becomes a 3-bagger or 5-bagger at that price point, 3 years later the mutual fund manager may not feel comfortable to invest incremental amount of money in that particular stock. So because of that, they may have more number of stocks in their portfolio, and to keep the turnover ratio lower, they need to have more number of stocks in their portfolio. If you see in that sense, you'll be able to explain why they hold a lot of stock as compared to other small cap mutual fund. Now, another important thing, whatever we discussed, we talked about why so many number of stocks, and then to examine whether this things is really happening, we need to check their detailed stock portfolio. If we see that there are a lot of stock which they have invested a long time back, and after that this stock has actually given a multi-bagger return, we will be able to square up this logic. Now let us see their detailed portfolio. You'll be able to see that many of the stock they have invested earlier, they still hold that. For example, if you check Deepak Nitrite, the first investment they have made, it is December 31st in 2016. Now many of you know Deepak Nitrite. Back then in 2016, how many of us, how many YouTubers has actually talked about Deepak Nitrite? Think about that. That time this mutual fund has invested in Deepak Nitrite, and since then it is holding. So you can understand how much return this mutual fund has got just because of the Deepak Nitrite they're holding for longer time. Since 2016 they're holding it. Now we will see some more stock similar to this investment. Second, let's look at Navin Fluorine. Now all of us know Navin Fluorine is a great stock. The first time Nippon India Mutual Fund has invested in the stock, it was 2011. So you can understand, probably Sunil Singhania or somebody else has invested in the stock, and when the fund manager changed, they did not sell Navin Fluorine. Even though it has given multi-bagger return, they patiently hold the stock. If you are a person who is more oriented for long-term investing, this is the signature of the long-term investing. One mutual fund manager is investing in one particular stock and then holding for really long time. This is the formula for making multi-bagger return if your pick is right. Even though the fund manager changed, the new fund manager patiently hold the stock. So that is why they may not increase the allocation on this particular stock. They have not added probably more on the position, because probably for the exposure control or the valuation reason, the mutual fund manager has kept the stock in their portfolio more than 11 years and they have got multi-bagger return from this. If you see, there are more examples like this. If you see NIIT Limited, they have invested first time in 2012. Now, if you see, many people are now talking about NIIT because they are going to separate their profitable and unprofitable business. And if that happens, probably it will unlock a lot of value for the shareholders. At least that's what the market participant expect. There are many such instances, we can go on and on. You will see that there is a pattern. You see that this mutual fund buy a stock and they let it grow over a long time. And that is the formula for multi-bagger stock. And that's what this mutual fund has been successfully been doing. And sometimes it is very difficult for a retail investor to invest in many such business and then get a really good portfolio of a small cap collection. The construct of this mutual fund helped me to have a very diversified portfolio of mid cap and a combination of small cap stock, which gives me a very good portfolio. So the investment strategy and the portfolio construct, it completely suits the need of me. And that is why we are invested in this mutual fund. It may not be the case for you. You may have a different expectation from a mutual fund and that's completely fine. This video is already getting longer. We will not extend this video any further. Do let us know if you want us to make a video on any other mutual fund that we own in our portfolio with the investment rationale. That's all for today. Take care. Bye.